Testing 1, 2, 3. Okay, so it is June 20th, and it's 3:44 p.m. Pacific time, 6:44 p.m. Eastern time. We have futures opened, and they are trading flat. Futures were open also Sunday night, and it made a respective gain of 1% for both the S&P, the Nasdaq. I'm not too sure about the Russell. I don't follow the Russell, but we're already up 1% from Sunday. So we're trading flat right now, and most likely the markets are going to be pre-market for Tuesday is going to be all green. Most of them. Maybe not for Coinbase and Micro Strategy, whatever that company is, because of the Bitcoin debacle. If we look at the main server 102, you can see the list of stocks that the algorithms are long going into the long weekend. The Juneteenth a long weekend. I think I said it was MLK. Obviously, I'm Canadian. I don't keep track of the American holidays, but I'm aware of them. That there are holidays in holidays that will close the markets down. But most of the time, I don't know all of them. And this particular holiday is called Juneteenth Day. And if you know anything about what it is, please let me know, because I am ignorant to what Juneteenth Day is. But a holiday is a holiday. It's a day of rest, and as you may know, we don't really want to be trading, like thinking about the markets on Friday night, Saturday, and Sunday afternoon. It's because it's a day of rest where we want to spend that time, because time is always more expensive than price. We want to spend that time with our family and friends as much as possible, and then when the market opens at around 6 p.m. Eastern time, particularly the futures first, then we can go ahead and start digging into the charts and making assumptions about what we can expect going into the week. So we have Shopify that's long, Roku, Amazon, and Google. Before we go into that, let's go and just take a look at the S&P futures, the chart. So let's go pull up a chart and see what kind of mess we're in right now, because I think we made a lower low, and I kind of predicted or assumed that the bottom was in back here. Obviously, that's not the case, and you can see a big fat gap there. I can see that from a mile away. And futures gaps, they get filled, okay, almost all the time. Most of the time, they get filled very fast. However, I remember there was a gap that was made back in, I can't remember when it was, but there was sometimes gaps can last and stay open for more than a year. Okay, so we have a gap in the S&P futures, also in the Nasdaq futures. Let's just double check that side by side. And let's take a look. Put on the gap finder. There it is. Okay, that's a massive gap. Okay, and it's going to get filled. And if it fills, it's going to be a pretty awesome day. 4.74% move. That's going to be a really huge rally. Okay, and that might actually be a sucker rally, right? We've been seeing a lot of rug pulls. Coincidentally, you can see that the Nasdaq has a wolf wave. Okay, and that's really weird, because that kind of supports the idea that the S&P here could fill this gap sooner than later, right? So we've got candle over candle, which is pretty bullish, and it doesn't have a gap. The Nasdaq doesn't have a gap unless we go down to the intraday time frames, and let's see if there's a gap here on the 30. Yeah, there is actually a gap here, but it's not. Why isn't it not showing on the daily time frame? It's probably because of oh no, it's there. It was a little harder to see because I have a little bit more indicators there, but there you go. So this is pretty straightforward in terms of what kind of assumption I'm going to make going into this week. And what you can see here is that both the S&P and the NASDAQ, probably even the Dow, have an average move from now till this gap gets filled of about 4%. Okay. And we have a strategy called ET. That's when the price closes above the 8-day moving average. So the 8-day moving average for the NASDAQ is at 11,538. So once it starts, obviously it's moving. The path of least resistance in these two daily candles is showing, pointing north. And if it closes above 11,538.56, then it's going to try to run up to this 21-day moving average. However, the question is it going to be able to run up all the way to the moving average of the 21 moving average at 12,000? Or is it just going to fill this gap, right? Is it, oops. Is it going to fill that gap right here and then just, proceed to make a lower low? Okay. And then maybe inverse head and shoulders back up to new highs into the end of the year, right? So is this the plan, or is it going to go up here, right? And then sell off all the way down here, and then do an inverted head and shoulders, get rejected maybe like that, and then make a higher low and reverse into an uptrend going into the end of the year. So if you're not looking, the best assumption is to assume that gap is going to get filled. It's not that far away. 3-4% might seem like a big hurdle for the NASDAQ, but it's not, okay? And the downside of it is much greater because it can make a lower low. So if it gets here, then I'm going to be looking to close all of my positions and then look for a short entry, especially into MicroStrategy or Coinbase. And the same idea here. You can see the S&P is identical to the NASDAQ. It's got the same path of least resistance, so it'll go up like that. And then if the S&P moves all the way up here, the 6-day moving average is going to get extended. It'll start to pull back to retest and probably fail and make a lower low, bounce, and make an invert head and shoulders up and rally into the end of the year, right? So that's kind of like the assumption we're making. So in conclusion, in summary, the main assumption here is to assume the market's going to move higher, and then once this gap fills, then you should be totally out of your positions. Okay, so let's take a look at a whole bunch of positions right now. I do have Tesla. Tesla's been kind of beating me up here, but thank God for position size. I didn't go all in. But let's take a look at Tesla. And a lot of people are probably blaming Tesla or the CEO about the price action. It's been kind of horrendous, right? It's down like more than from its 52-week high year to date. From the 52-week high, it's down about 50%, and so there's not a lot of love in the stock of Tesla, but there will be a pretty big rally simply because there's this A8 here that's just kind of getting ready to squeeze for the next leg up, and you can kind of see there's a monthly wolf wave which is suggesting a price target of $28. I don't think that's going to happen. There's a good chance maybe 377 could be a target, but once this trend is broken and it starts starts running toward the fifth pivot point here on the bearish wolf wave, then it's going to be breaking out to all-time new highs. But short-term wise, if we take a look at the short-term time frame here on the 30-minute with after hours turned off, there is an ideal trade setup. You can see the ideal trade setup with two Darvish channels, horizontal and yellow. And on Thursday, it made a low, and then it bounced off that low, retested the UTL, which is the yellow line, and we get a TGF that trigger for Tesla going into Friday. So there is actually if the assumption about the Nasdaq moving about 3.84%, running toward that gap, then most likely Tesla is going to run up toward 706.99. Okay. So that is Tesla for the short term. If we look on the trading view chart, there's also a gap right here. So these gaps give you an idea of where you can look to take profits. So there's that coincides well with the upper channel of the Darvis that I just showed on the main server 102. And there's a 30-minute TTM squeeze and also a 78-minute TTM squeeze. So gap fill. And above that, there's a small little gap right here. So whatever, this moving average is the 200 moving average on a 78-minute time frame. So I think because the futures opened up higher on Sunday, what's going to happen is it's going to gap up and then run toward the 660 level and then push right through that and then rally for the next 1 or 2 days and fill that gap. And then once that gap is filled, it's going to move into this moving average and then get rejected and then sell off again. So I'm expecting a sell off maybe Thursday or Friday, but from Tuesday to Wednesday, I think we rally for at least 2 days in Tesla. Tesla's daily candle is still trading under the 6-day moving average, so the trend is still intact for more downside. However, from time to time, you can get these massive rip your face off rallies that push above the 6-day moving average, making you think that the trend is broken. Okay, and that's what we can expect here. A little Magic Mike pull. Okay, these little wicks tend to renegotiate prices with the previous sellers and buyers and run it up to the 6-day moving average at least. But I think there's a gap at 709, so there's actually probably move toward the 21-day moving average and overshoot it. So that's a 2-day candle, maybe even 3-day candle. There's also an A6, which if we turn, this is one of the A6s that I tried to catch on this candle. However, it obviously pulled the rug underneath, not only me, but probably some other people. And it went in the opposite direction, 9% down. So we'll see what this A6 does. This A6 is a pretty big squeeze. And if it really squeezes and the market reverses, like it made a low back here in May 24th. And it didn't make a lower low, even though the NASDAQ made a lower low on the recent pullback last week. So is this the bottom? We'll see. Because definitely tomorrow, Tesla does not look like it's going to move lower, because on Sunday, the futures were trading 1.1% higher. And if we look at the futures right now, they're trading flat. So markets are anticipating more upside going into Tuesday. Looking at Shopify, it looks like on Friday and Thursday, it tried to make a lower low from June 14th low, but it doesn't look like that on the Heikin-Ashi candle. And also, it doesn't look like that on the regular daily candle. With gaps above it, it's still the same idea. Since the NASDAQ and the S&P have these gaps that need to get filled, most likely Shopify is going to run toward the 21-day moving average and probably fill the first gap. Looking for a 50-day moving average gap fill, that could happen, right? There is an anticipation of that split coming in. So whatever you load up into Shopify, if you're planning to trade Shopify, you would load up like more than 2 contracts, maybe like 4, depending on your balance. Obviously, you need to position size so that you don't blow up your account. But you would want to take additional risk for it to run up, because the probability of it running up higher is favors the bulls. And then once you're up here, you want to close off most of your positions except for one or two runners and see if it gets up to the 50 and fill this gap here at 440, which would be pretty crazy. But when I actually look at the chart, this is kind of like a bearish chart that could move lower, right? It does have that bearish look, and you would believe that that's a pretty bearish looking chart. However, the reason why we wouldn't be assuming that is because the Nasdaq and S&P has that gap, right? So the gap governs the futures gaps, governs the entire market. Even though the markets, each component of the market could disconnect and move opposite to the markets, most of the time it's not the case. It's going to be the case where they all move together, and if you see relative weakness, whereas the indices Nasdaq and S&P are moving 4%, but Shopify is moving 1%, then that will give you clues that this thing is going to try to fill the 275 gap this week. Going to let's go take a look at Roku. So I have positions in Roku. Roku is actually a pretty good-looking chart setup with a the bullish wolf wave. And what has happened is that there has been this massive sell-off with gaps. Okay, there's a small little tiny gap here at 92. And on Friday, it pulled back pretty hard and bounced off the 6-day moving average. As you see that it closed green. And then because we know that the S&P futures and the Nasdaq futures traded higher on Sunday, then most likely Roku is going to be opening up higher, running toward the 21-day moving average, and then possibly filling that 92 gap. I got the $94 calls. There is a 78-minute TTM squeeze, and it looks like on the 70-minute TTM squeeze, the gap that's being displayed here is at 110. If we drop our time frame lower, it's still 110, and if we drop it down even lower to the 5 minutes, then it's still, then it becomes 102, okay, which 102 corresponds to an overshoot of the 50-day moving average. So this is a really good looking chart and setup for a move up to the bottom of this gap at 116. Okay, I don't think it's going to fill, once the S&P, because Roku is quite a volatile stock, and it does make these massive moves like 20 to 25%. And if it runs up like 10% on Tuesday, then it's going to look like it's going to fill that 91 gap. So that would be the area where you want to close the position. Well, I'm going to be closing the position because at that point it will be extended, and I will hold a couple of runners because there's an A6 here. And when we turn the candlestick formulation into the Heikin Ashi candle, it looks like we're beginning a trend. So every time there's a green Heikin Ashi candle, then you have four to three good days that could run the stock price up to some sort of major moving average. So I don't think the major moving average here would be $88. That's the 21-day moving average. I think it's going to be trying to attack that 95 as the Nasdaq and the S&P fill their gaps. Let's go check out Apple. Okay, so Apple has been in the Heikin Ashi formulation. You can see that the candlesticks are still showing a trend lower, trading also under the 6-day moving average. If we go back to the regular candlestick formulation, it's green, closing inside day with a little wick. So because the S&P moved up, traded higher on Sunday, most likely Apple is going to try to attack at least the 6 up to the 8, and then try to fill this gap at the 21, which is a pretty big move. So Nasdaq moves 4%, then Apple moves 8. Could be with news. It's pretty hard to say if that's the case. Boeing had a a pretty decent Boeing Wolf Wave. I was in this position right here. We noticed that there was about $10 million worth of option calls. I closed my positions off with a small loss, and then it moved up higher. So, Boeing, these Dow components move really slow, and I should have held the whole position for at least one full day because there was a 78-minute TTM squeeze. I was not in it, but I think some people were able to close some positions with profit and have a couple of runners up to the 50 moving average at 146, and if you're lucky, 168. I am looking to short Coinbase. I think Coinbase will be selling off pretty hard on Tuesday, and that's because the Bitcoin price dropped below 19,000. It could be dropping even more tonight, but I'll wait for a better entry. But I am looking to short either Coinbase or MicroStrategy. Netflix, Netflix is looking still. It's got the same trading opportunity, right? It's got that gap fill, and once that gap is filled, then like everything else, I think we're gonna probably retest a lower low. Nvidia, same idea. They all look very, very similar, so they're gonna fill that gap, and there's two gaps here. I'm not sure. You'll get to know, like, if once the S&P and the Nasdaq start to fill that gap, you'll probably notice that maybe this gap here at the 180 level is not getting filled in Nvidia. Okay, and then that would indicate relative weakness. So you should be looking to get ready to short the market on that day after the Nasdaq and S&P fill the gap, because that's relative weakness. We already looked at Roku on the daily candle. Nice bounce off that 6-day moving average. So we're looking for the Nasdaq to rally, and if that does, then Roku will rally with it. We already looked at Shopify looks exactly the same, but its candlestick pattern here in the past 7 days looks very bearish. It's just like a bear flag ready to sell off. But because we'll see what it does, but if it closes above the 8-day moving average, which I think it will, then it has a good shot to rally up to the 21 at 351 and maybe even fill that gap. Then you get the rollover. Tesla, we've already talked about that. It looks exactly the same. However, there is also an A6. I don't really, these are a little bit tough because of the premiums. You have to go so far out of the money. It's better to just trade Tesla when there's a valid setup. This is a valid setup on the ideal trade 30-minute time frame. So, but I did not get into any of these positions on the close of Friday. I just have positions that I still have from last week. AMD, it also looks like it's trying to bottom here. It's actually extended, okay? Meaning that the price is far below the green dot, which represents the 6-day moving average. So there's probably going to be a little bounce, a green candle that goes up to tag that 6. And if the momentum in the market really picks up, then yeah, maybe 94 and then retest, make a lower low again on the next sell-off. Okay, so that's pretty much it for today's market update. Looks like the futures are now trading green. Bitcoin is trading flat, trading above 20,000. So it looks like we might get a pretty strong Tuesday. Bitcoin is scanning on the 78-minute time frame, so there is a big move coming. Looks like the Nasdaq and the S&P on the 78-minute time frame is also going into a continuation cycle. Okay, so once the cycle starts to break out on cycle 1 and 2, and then it starts to reverse, and if it's not able to reverse, and if it's unable to continue with this path lower, then it's going to reverse and continue moving in the direction that it closed on Friday, which was, I think it closed green, I believe. Okay, so thank you very much for your time, and I'll see everybody tomorrow morning.